In this video, I'm going to break down the Real Estate Investment Quadfecta that explains why Cleveland is an excellent market for investors to pursue in 2019. I'm Rob, and this is the Cleveland Investor Primer channel, created by an investor for investors, whether you're pursuing your first property or your 81st. If you're new to the channel, please subscribe down below. Leave a comment and let me know where you're from. As someone who lives in California but invests long distance in the Cleveland market, I get very commonly asked, why do I invest in Cleveland? I decided to make this video to explain the Real Estate Investing Quadfecta and get into detail about why I believe the Cleveland market is an awesome place for investors. The Real Estate Investment Quadfecta is a combination of 4 elements that encompass both qualitative and quantitative factors that, when combined, really create an environment that is hard to pass up from an investment standpoint once you fully understand it. The first element, which is a favorable price to rent ratio, is highly quantitative and really comes down to the price of property relative to the rent that would be received for the property. Unless you've been under a rock, you probably realize that Cleveland has relatively cheap property prices compared to other parts of the country, but price alone means nothing unless you compare that relative to the actual rents that are received for a property. So think about actually the average GRM for all residential property in a particular area, and that is what gets you the price to rent ratio. If we dive into smartasset.com, which is a popular personal finance website that I personally have no affiliation with, we can see that they published an article earlier this year that basically ranks price to rent ratios in major cities throughout the US. If we scroll down here, we can see that they're using census data, which I love, by the way. It's very solid data to use. And they have a very reasonable and transparent methodology that simply divides the area's median home value by the area's median annual rent to come up with the resulting price to rent ratio. So at the very high end of the list, you'll find the likely suspects: San Francisco, Oakland, Honolulu, LA, and New York, which means these are really the least favorable price to rent ratio cities for real estate investors. If we scroll all the way down to the other end of the list here, we see that Pittsburgh, Buffalo, Toledo, Memphis, Cleveland, and Detroit all have price to rent ratios of less than 12, which means these are really the areas with the most favorable price to rent ratios for residential real estate investors. I'll go ahead and link to this page down below in case you want to check it out for yourself. The second element, which is a robust and diverse economy, kind of straddles the line between quantitative and qualitative. Once upon a time, Cleveland was pretty much a solidly industrial city with industrial manufacturing type work dominating the landscape of what the city was all about. Over the past few decades, that actually changed dramatically, starting with the 1960s, 1970s, as a lot of the industrial players started to relocate either to the south or out of the country entirely. Cleveland went through some bumpy times, to say the least, but what's happened over the past decade or two specifically is that we've seen a huge resurgence in Cleveland's economy, and not just in a single industry or just a couple of industries, but across a very broad spectrum. Cleveland has really become a huge healthcare hub in the past couple of decades, with both the Cleveland Clinic and university hospitals each employing tens of thousands of people and having global reach. Healthcare is really a big business in the Cleveland market right now, with the Health Tech Corridor, sort of this span of area between downtown and the area called University Circle, where the Cleveland Clinic and university hospitals are based, being this health tech hub in a sense that is fostering tons of healthcare startups, healthcare technology. It's a huge thing right now. I mean, literally tens of thousands of people are employed in the sector, and the growth is phenomenal. Beyond healthcare, you've also got a number of Fortune 500 companies, such as Progressive Insurance, Parker Hannifin, Sherwin-Williams, KeyBank, all based in Cleveland or the surrounding suburbs, making for a really diverse set of employment base for the local economy as well. And then beyond the Fortune 500, you've got tons of other companies that are based in the Cleveland market, spanning tons of different industries. Everything from Lincoln Electric in the welding space to American Greetings in the greeting card space to Primus Capital in private equity, all are based in the Cleveland area, plus dozens, if not hundreds, of other companies. So, it's a huge diverse economy. It's spanning so many different types of businesses. And of course, what would a robust and diverse economy be without consulting firms to take a slice of the pie? Accenture, McKinsey, Deloitte, PwC all have offices in Cleveland, which really goes to show that it's actually a pretty substantial local economy. The third element, which is pretty qualitative, is major city infrastructure or qualifiers that kind of put a city on the map. Cleveland for nearly 100 years was in the top 10 most populous cities in the United States list until after about 1970. A lot of the cities in the Southwest and on the West Coast started to surpass it in population. That doesn't mean that all the infrastructure and cultural institutions just go away when a city falls out of the top 10. It's an established city. Cleveland is home to major colleges and universities such as Case Western Reserve University, the Cleveland Institute of Art, John Carroll University. It's the home of sports teams such as the Cleveland Browns, Cleveland Indians, Cleveland Cavaliers. And of course, Cleveland is home to some world-renowned cultural institutions such as the Cleveland Orchestra, the Cleveland Museum of Art, and most recently, a few decades ago, the Rock and Roll Hall of Fame and Museum. And on top of that, Cleveland really does have that older big city infrastructure, such as a light rail system, an international port, a fairly decent sized airport, and things like that give it that big city vibe and give it presence. The fourth element, which is on the quantitative side, is that there's significant price upside potential. Back when real estate values crashed about 10 years ago, a little over 10 years ago, they crashed really hard in the Cleveland market. While they are up some over their previous trough, they haven't yet reached the peak value in most parts of the Cleveland area, at least most parts where investors are focusing. There are some areas of the Cleveland market that have exceeded their previous peak value, but those are usually the more trendy or upscale areas. The areas that are more in the typical investor range, which is sort of that working class to middle class realm, a lot of those values are still a bit below where they were at the previous peak, though they're pretty far up from the trough values that we saw back in 2010, 2012, even 2013, 2014. If we take a quick look at some of these properties that are actually on the market, you can see what I'm talking about. Before I continue, I just want to mention that I have no association with either of these properties that I'm going to use to illustrate my points today, nor do I have any connection with the listing agent or broker. So here's a typical colonial style house for sale in the city of Lyndhurst, which is a pretty solid middle class east side suburb of Cleveland. 5139 Edenhurst Drive is listed for $110,000 and is a pretty typical listing for the area, not any particular anomaly in any way. If we scroll through the photos here, we see that it's sort of a typical middle-class suburban house, seemingly in pretty good condition overall. Then if we hop on over to the Cuyahoga County Property Records website, which is extremely useful and easy to navigate, I find, we can look up this property to get a sense of its history. So 5139 Edenhurst was purchased by its current owner in 2012 for $72,500 as a bank-owned property. The bank foreclosed on the house earlier in 2012 at the sheriff's sale here, and the foreclosee appears to have bought the house in 2003 for $136,000, which is actually a few years before the values even peaked. Had they sold the property in 2005 or 2006, it probably would have sold for about $150,000. So at its current listing price of $110,000, it's a discount of $40,000 or about 25% relative to its peak value. If we look even further back in time here, we can see that it sold for $112,000 in 1998, and in August 1997, 2 months after I graduated from high school, hashtag feeling old, it sold for $110,000. So at the $110,000 listing price in 2019, this house is now the same price as it was 22 years ago. The census tract where this house is located has a median income of a little over $75,000, and it's a safe and quiet area that's predominantly owner-occupied. So it's not even remotely a place that's high risk, and there's a huge potential for upside as these values continue to quickly correct and return back to their peak value or above. Next, let's take a look at a house in the city of Maple Heights, another east side suburb. 14701 Reddington Avenue is a typical post-World War II Cape Cod, and it's listed for $79,900. This is an area that's more on the working class or lower middle class realm, and if we take a look through the photos here, we see that it does appear to be in good condition, and it looks to have been recently updated, very suitable for the area for that sort of lower middle class, working class type of area. If we hop back over here to the Cuyahoga County Auditor's site, we can look up this property, 14701 Reddington, and we see that the current owner paid $94,000 in 2005. A few years back, around 2010, 2012, 2014, a house like this would have sold for probably only $30,000 or $40,000, maybe $50,000 if it was in exceptionally good condition and you're lucky. But at its current listing price of $79,900, though, that's still 15% less than its peak value from about 14 years ago. This is in a census tract with a median income of about $40,000 for household income. So it doesn't seem unreasonable to project that these values could be back in that same neighborhood of around $100,000 or maybe a bit higher pretty soon. My point in showing these two example properties isn't to say these particular houses are or are not good investment opportunities. Obviously, before purchasing any real estate, it's really important to conduct your own due diligence. But I just wanted to share these as examples to show how there's pretty strong price upside potential in the Cleveland market, with lots of properties that are still selling below, significantly below in some cases, their 2005, 2006 peak values. So now we've covered all four elements of the quadfecta: favorable price to rent ratio, robust and diverse economy, major city qualifiers, and significant value upside. There is certainly no denying that lots of markets have one, two, or sometimes even three of these elements, but very few have all four, which is what truly makes the quadfecta and what makes Cleveland such a favorable market for investing in 2019. And that's why I invest in the Cleveland market, and why I truly believe that other investors would fare well if they were to do the same. If you already invest in the Cleveland market or are considering doing so, please leave a comment down below and let me know. If you'd like to learn more about investing in Cleveland from an unbiased source that's not trying to sell you a property or manage your property or buy a property from you, check out my website at www.clevelandinvestorprimer.com. And if you found this video insightful, please do click the like button down below. Subscribe to my channel if you'd like to see more content like this. Until next time, this is the Cleveland Investor Primer channel. I'm Rob. So long.